Thanks for joining us today on the Statler Financial Radio Show. Jennifer Rizak here alongside Philip Statler. He is president and CEO of Statler Financial Services. And Philip, we have a great show lined up today. We're going to be talking about your financial checkup. We have focused so much lately on our physical health. That's obviously been a huge part of our focus lately with everything that's happened this year. But Philip, how many people or just do you think the majority of people need to do a financial checkup given everything that's happened so far this year with the markets and the state of the economy? Do you think that's something that we really ought to be thinking about?
I do, Jen. I think that, and I think it's something that people should be doing on a regular basis anyway. Just like from a health perspective, the older we get, the more often we need to go to get a checkup. And at least annually, right? You want to get a checkup. And it's no different on your financial front. At least once a year. We sit down with a lot of our clients twice a year just to gauge where they are and to make sure that they're still moving in the right direction and we're accomplishing the goals that need to be accomplished.
Yeah. So important to keep an eye on that stuff. And as we talk about that, let's start by giving some contact information for you, Philip, because I'm guessing a lot of people, the things that have happened this year has been kind of a wake-up call for how they really are set up financially and for retirement. So we want to tell you how you can reach Philip and the team at Statler Financial. The number is 863-285-3815. That's 863-285-3815. The website is statlerfinancial.com. And also, Philip, you're very active on Facebook. You're always posting market updates and videos on there. So just search for Statler Financial Services on Facebook. And Philip, just talk a little bit about some of the ways that we can get in touch with you now, because clearly things are just a little bit different. And I wonder maybe if they'll continue to be different is in terms of how you can use technology to meet with people in different ways. Do you think that's something that you'll continue doing even as things get back to normal?
I think we will, Jen. It's like, I was listening on the radio and they were talking about how, people are finally going back to work. And there's this like, okay, how many people think they'd rather stay home, right? They've been able to work remotely well enough that they don't really feel like they need to go to work and they can get as much done, sometimes more done at home than they can at work. I think it is going to change the dynamic and it's changing for us, right? So a lot of our clients, we can now do Zoom meetings and virtual meetings and phone consultations. People don't have to come to my office to work with me. And so I think that's a good thing. In a lot of ways, it does. The Zoom still helps you build that, hey, I can see you, you can see me, and helps build that relationship. Mm-hmm. But I think things are going to change. There's going to be a new normal, and that new normal is going to include more and more technology.
Yeah, I mean, it's certainly, I think, a silver lining. It's a positive to find new ways to do things, new ways to do business, new ways to connect with people. People probably are looking forward to getting back to some semblance of normalcy, but still, it's kind of cool that we can learn some of these things and carry some of these lessons with us. Let's talk a little bit more about what are people realizing in terms of their financial health with everything that's going on. Again, physical health has been a big part of this, but there are a lot of people who are now worried about their financial health as well. Talk a little bit about how you would give someone a financial checkup to see what's going on and start figuring out what changes they ought to make.
Well, Jen, one of the things when we sit down with somebody, you talk about, physical health and how that affects things that's one of the questions we ask folks when we sit down and meet with them for their annual or semi-annual review is, how is your health? Because that in itself has a lot to do with their finances. And so we want to know, are things going well with your health? Are you having some challenges? Because those challenges may down the road be, kind of cause some financial stress. And so we want to make sure that we're on the right path and that we're getting that under control and ahead of time as part of our financial review.
Talk a little bit about what all that covers, because right now people are concerned about maybe losses with their investments and just some of those things, but really what you take people through is really comprehensive, and it does more than just look at your investments or just look at your taxes. You really have a comprehensive approach. Could you describe that for us a little bit?
We do, Janet, and it all kind of starts with our income plan, right? Because income is the key in retirement. We all have to have income, and so if we can fill that gap, that income gap, whatever that may be, then it takes a lot of stress off of the rest of the financial picture. And so when we build that, a lot, maybe not all, but a lot of our income strategies have absolutely nothing to do with the stock market. We're building income plans through alternative means that so folks don't have to worry about, well, dadgum, the market's down 40%. What's that going to do to my next, monthly deposit? Well, it's not going to affect your monthly deposit at all. It's not going to affect your stock market account at all. And so that gives them a peace of mind. Now, I will tell you, they forget, right? They forget that their income is not attached to their stock market account. So
Mhm.
so we have to remind them of that hey, well, all this stuff that's going on over here in the stock market, it's not affecting your income account. So don't forget that, and stay focused on enjoying your retirement and knowing that your income is going to be there no matter what.
The number to call again to reach Philip and the team at Statler Financial Services, 863-285-3815. That's 863-285-3815. Statlerfinancial.com is the website if you'd like to learn a little bit more about Philip and his team and some of the opportunities that you have to connect with them. And again, on Facebook, just search for Statler Financial Services. They're always posting videos and other resources on the Facebook page. So again, search for Statler Financial Services on Facebook. Here's one of the other challenges, Philip, as we talk about getting that financial checkup. When you think about getting a physical checkup, you know what kind of person who can help you with that. And if you need something specific as it relates to your health, we know the different types of specialists that are out there. We know about cardiologists. We know about chiropractors and podiatrists and all the different types of doctors who can help us with specific needs. We don't always know that with our money. And the thing is, there are different types of people who can help us with different types of things with our money, right?
You're absolutely right, Jen. And that's a very good point. So often, folks don't realize the differences between, somebody that works with everybody, a general practitioner that just helps you grow your money, versus another advisor that focuses on creating income for retirement. It's really and truly the difference between left field and right field on a baseball field, right? So they're totally opposite ends of the spectrum in how you plan for them and how you create those ongoing plans. And so, making sure that as you head into retirement, you get to be that, 55. That's kind of the key age where I suggest people really and truly start making an adjustment on what kind of advisor are they working with, because now we don't need to necessarily grow. We need to grow it, but not as important as not losing it, right? And having that income plan set up for down the road. And Jen, it's easy for folks to lose sight of things like that in everyday life. And so that's why we think that it's important that we meet with folks, a couple times a year. And if you're not getting that type of relationship with your advisor, give us a call, walk through our financial x-ray to determine how much risk you have in your portfolio. Give us a call at 863-285-3815. I think it's important, especially where we are right now and how things are going in the market.
And I really like, Philip, as we talk about this, your financial x-ray that gives us a good look at what's going on inside. And we talk about the people who can help us with this. I've told you this before. The last time I had to take one of my kids in to get some sort of imaging like that, my daughter had a stress fracture. And as I was sitting there waiting for the doctor to come in, and they had that image up on the wall and we were looking at it, and I saw a couple of areas that I thought, oh my gosh, this does not look right. And I texted my husband and I said, I'm no expert, but wow, there's a real problem here. But when the doctor came in and he starts showing us where the stress fracture is and where the problem area was, it wasn't where I was looking at her foot at all. And when I pointed out what I was worried about, he said, well, that's actually normal bone structure. Here's the area of concern. So I clearly.
Good thing you're not a doctor, huh?
Good thing I'm not a doctor, but I'm guessing that those things happen too financially, where we get so worried on one area and someone like you can identify, well, no. Here's the real problem area. You're focused on losses right now in the markets, but look at this tax issue. I mean, you're able to help us get a better idea of not only what's going on, but then explaining it and helping us understand it as we look at it ourselves.
You're right, Jen. And so often I sit down with folks and I see both extremes of the spectrum, right? I see people that are 100% invested in the market, and they may be 67, 80 years old, somewhere in between, but they're all in the market. And then I see people also that are fear has set in, right? So they're 100% in cash, CDs, money market accounts. And that's two extremes. Neither one of them's right. Neither one of them. I don't care if you are 50 or if you're 100. Neither one of those scenarios is right for the average investor. There needs to be that middle ground. And so, and I think that's what we really preach is that, folks, we need to be somewhere in the middle. We need to look at the age, use the rule of 100 to determine how much risk you should have in your portfolio. And if you're one of these people that are super risk adverse, you don't like any risk at all, fine. Then 10, 15% of your portfolio still should have some added value in the risk bucket if it's managed properly. If you just have somebody that's throwing in a bunch of mutual funds and letting it ride and not actually taking care of it, well, that's a different story, right? That's not serving you properly. And that's where we believe you need to have, the proper risk allocated portfolios to kind of guard against that. Listen, folks, has your financial advisor gotten you to where you are today? And that's good. A lot of them are really good about growing money. They're not so good about making sure it lasts throughout your lifetime. And that's what's important as you head into retirement. Now's a great opportunity to get a second opinion on your retirement accounts. Give us a call at 863-285-3815. That's 863-285-3815 and schedule your no obligation financial x-ray. Do it right now, 863-285-3815.
This is the Statler Financial Radio Show. We'll be back after this.
Do you have a retirement plan but would like a second opinion? Call Philip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815. Remember that first paycheck when you started working all those years ago? You're finally out on your own earning money, and you look at the net amount on the check and you think, whoa, what happened here? Well, it could be this way with your retirement accounts. You know how much you've saved, but if you haven't planned for Uncle Sam, you could come up short in retirement. With the recent tax cuts, there is a lot you need to know to make sure you're not paying more than your fair share. Philip Statler and the Statler Financial Services team can help. They've helped hundreds of families plan for retirement for more than 20 years. They will help you create a retirement plan that shows you how taxes could affect you now and in the future. Set up a visit with Philip Statler and the team at Statler Financial Services. Call 863-285-3815. That's 863-285-3815. Make sure you know how these changes could affect you so you can avoid those whoa moments in retirement. Call 863-285-3815. Investment advisory services offered through Statler Financial Services, LLC. Neither the firm nor its agents or representatives may give tax advice.
Thanks for joining us today. This is the Statler Financial Radio Show. I'm Jen Rezac alongside Philip Statler. He is president and CEO of Statler Financial Services. StatlerFinancial.com is the website if you'd like to learn a little bit more. And of course, a great place to get updates from Philip and get the latest in terms of market reports from him. Go to Facebook. Statler Financial Services is what you can search for, and they will pop right up. And as I said, they're always posting videos and updates on there, so you can get the latest from Philip on Facebook. Here today, we're talking about keeping an eye on your financial health, just like you do your physical health. And what you don't want is something like a drop in the markets to cause your blood pressure to spike. And that's why it's important to understand just how much of your retirement savings is at risk. And I think, Philip, a lot of people probably experienced that not too long ago with some of the drops that we had in the markets. Talk about how we can stress test our portfolio so we can figure out if the markets go sideways again, or if we have some more losses in the future. Can we stress test to see what that would do to us?
Jen, we can. And that's really and truly how impactful our financial x-ray is. And that's why we use it, is because we want to stress test folks' portfolio. And what does that do? Well, it takes different periods of time in history, and it says, here's what your portfolio would have done had we been invested the way you are today in 2000 to 2003, or here's what would have happened if you were invested back in 2007 to 2009. How much money you would have lost, what would have been impactful, or it could show you from the bull market back in 2013 how much you would have gained. But it stress tests that portfolio to determine what your portfolio would have done under certain circumstances and how that would have impacted your current portfolio. And I think it's important that people realize that, because they think in terms of percentages and they don't necessarily relate that to dollars, Jen. And dollars can make a huge impact, right? And in terms of what they lost compared to just thinking of it in terms of percentages, because people think, well, geez, 20%, that's not much. But on a $500,000 portfolio, that's $100,000. That's a pretty big, drop in value if you're looking to retire anytime soon.
Well, and I think that's an important thing to point out with percentages versus dollars, because it's kind of like a transition or just a change in approach. Because, Philip, our life happens in dollars. We don't go to the grocery store and think about our bill in terms of percentage of our income, right? We look at it and we say, okay, I owe $98.50. That's what my groceries cost. Not that was X percentage of my paycheck. But then when it comes to the markets, we have to think about it in terms of percentages. But is it more helpful to think about that in terms of actual dollars? Is that more meaningful if we can know the dollar amount rather than the percentage of a lot?
Well, I think it is in terms of giving us the full impact of what that loss really means. Because that's the thing, is that when we see it as a percentage and we don't equate that percentage to dollars, then most of the time when I sit down and talk to people, they don't perceive it as being that big of a deal.
Right.
But when you show them that same loss as a dollar, they're like, oh my gosh, I can't afford to lose that much money. So it's a big difference when you start thinking about it that way. And our industry, they like to use percentages. They don't like to show you on dollars because dollars are more impactful to you. And so that becomes a big deal.
Let's talk a little bit about what we can do about it, Philip. If we come in, we've had a wake-up call because of all the things that are happening this year. We think we need a financial checkup to make sure that we'll be okay if we have more volatility or if we have bigger market drops and we're worried about what that could do to us. Talk a little bit about what we can do to uncover what's really going on, and then what can we do about it? How do we make changes to where our money is so we don't have those massive losses?
Well, I think that one, when is a good time, right? I mean, because people, I get two things, right? Man, the market's fallen 30, 40%. And now is not the right time. Well, it may be, right? Because we could still bounce up and go down another 40%. Nobody knows. So anytime is a good time. Now, whether or not we act on it, that could be something different, but anytime is a good time to get a second opinion. And number two, it's a great time to find out how much risk you have in your portfolio, because you want to know if I'm sitting and we've lost money, because Jen, let's face it, this market has zigzagged already. And we're not even to the end of the year yet. So, I mean, we've seen a big loss. We've seen a big bounce down, bounce back up. We could see another leg down. We could see another leg up. We don't know. But it's important that you know that wherever we are, we could still go down more. And we could go up. Your chances of either are the same, whether the market's down at 15,000 on the Dow or it's up to 30,000 on the Dow. So now's a great time to get that second opinion. And then once you get that opinion and you look and see what the stress test looks like on that portfolio, when's a good time to make changes? It depends on what you think the market's going to do. And how you think that the market's going to be impactful to you. My industry will tell you to hold the line, just keep doing what you're doing. I'm going to tell you that's not always the best thing to do. As a matter of fact, most times it's not necessarily the best thing to do. Obviously, it depends on your circumstances and what your portfolio is doing, but that's why you get a second opinion and you get the stress test and you come away with a plan that will allow you to move forward no matter where you are. And so that's what we help clients do, is move forward from where they are based on where we are in the marketplace right now. When it comes to retirement, you don't know what you don't know a lot of times until it's too late, which is why it's so important that to have someone who's on your side, because retirement is too important, folks, not to get right the first time. And there's no do-overs in retirement. I mean, we're talking about the rest of your life here. And it's the goal of me and my team at Statler Financial to help ensure that you enjoy the years of retirement that you have. When you give me a call at 863-285-3815 right now, we'll schedule you an appointment and we'll go over, we'll get to know each other. We'll figure out what your goals are. What do you want to accomplish? And then we can move forward from there. Once we kind of understand your circumstances, then we can see how we might be able to help you. You need to have a plan developed for you, not some boilerplate plan, not some 50-page report. You need something to design specifically for you. But to do it, you have to give me a call at 863-285-3815. That's 863-285-3815. Do it right now to get started.
Philip Statler is with Statler Financial Services. I'm Jen Rezac alongside. I'll give you that number again, 863-285-3815. Philip, for those who really are sick of all the ups and downs with the markets, does it ever make sense to just get everything out of those market-based investments and say, I'm done, it's not worth the risk anymore, and get entirely out of it?
That's $1 million question, Jen. I would say probably not, but it depends on the circumstances, right? It depends on the person. It depends on how far they've seen the market decline. I mean, what I generally see is people get out too late. And so for those people, I say no. At that point, you might as well write it out. The guys that sold out back in 2009, when the S&P was down to, I don't know, what did it finally get down to? $700. Yeah. For the guy that sold out right then, that was a mistake. They did it because they couldn't stomach what if the market continued to go down. But at that point, they were so far in, Jen, they might as well have ridden it out. And I know it's psychological, but at that point, a lot of times people should have ridden that out. But they call that the point of capitulation, right? And that's a big word to say that's when everybody wants to bail, no matter what it costs them. And so That's the point that the market finally will start to make the turn. When people start to capitulate, when they see that in the marketplace, that's when the buyers come in and start buying and the market starts to go back up. Does it happen that way for everybody? No. That's why you need to have a financial advisor that's independent, that can walk you through the process and keep you on track from day one so that you don't get in that situation to begin with, Jen. That's what's important, is that, hey, if you're in that situation to begin with, maybe you're not with the right advisor to get you through retirement. That's kind of what you need to think about at this point.
Let's talk a little bit about, again, how we can make sure that we're working with the right person, or at least get that second opinion from someone like you, Philip, who can take a look at what's going on and also have a better understanding of some of these things, of how to turn those investments and the places where you have your money, how to get income from those different sources. Because I think that's the other thing we need to talk about, that transition that happens. And that's the stuff that you really focus on with what you do.
Right. So I think a couple things, right? One is, and I don't know if we'll have time to answer both those questions in this segment, Jen, but the first point is to work with somebody that is independent. And why do I say that? Well, I'm independent. So you say, well, you're biased because you're independent. Well, here's what I do know. I know that somebody that's independent has access to all the tools that are out there from a financial standpoint. And I know that the person that's not independent doesn't have access to all the tools that are out there. That I do know. Mm-hmm. So that's number one. You want somebody independent that doesn't work for the company store. Two, you want somebody that's focused on retirement income planning, that is the majority of what they do. I mean, I had somebody ask me the other day, well, what's the average age of your client? Well, the average age of my client is about 70. They all need income, right? So that's my focus, is creating income for those folks down the road. And so that becomes important. And the rest of it we'll get to in the next segment. But you need to ask yourself, can I afford to retire? What's it going to cost me to retire? What's the probability that if I keep doing what I'm doing, I'll run out of money someday? Those are the questions you need to ask, because a lot of times these financial places, they'll run these Monte Carlos that, hey, you got a 90% chance of success. Well, okay. Do you want to get on the airplane with a 90% success of getting from here to Atlanta? I don't know that I do. I want 99.9% success that I'm going to get on the airplane and get from here to Atlanta. You need to have the same kind of success rate for your portfolio. Give me a call right now at 863-285-3815 to find out what kind of success rate your retirement plan has. That's 863-285-3815. Do it right now before it's too late. That's 863-285-3815.
Talking today with Philip Statler. He is with Statler Financial Services. The Statler Financial Radio Show continues after this.
Do you have a retirement plan but would like a second opinion? Call Philip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815. Remember that first paycheck when you started working all those years ago? You're finally out on your own earning money, and you look at the net amount on the check and you think, whoa, what happened here? Well, it could be this way with your retirement accounts. You know how much you've saved, but if you haven't planned for Uncle Sam, you could come up short in retirement. With the recent tax cuts, there is a lot you need to know to make sure you're not paying more than your fair share. Philip Statler and the Statler Financial Services team can help. They've helped hundreds of families plan for retirement for more than 20 years. They will help you create a retirement plan that shows you how taxes could affect you now and in the future. Set up a visit with Philip Statler and the team at Statler Financial Services. Call 863-285-3815. That's 863-285-3815. Make sure you know how these changes could affect you so you can avoid those whoa moments in retirement. Call 863-285-3815. Investment advisory services offered through Statler Financial Services, LLC. Neither the firm nor its agents or representatives may give tax advice.
Thanks for joining us today. This is the Statler Financial Radio Show. I am Jen Rezac alongside Philip Statler. He is president and CEO of Statler Financial Services. StatlerFinancial.com is the website if you'd like to learn a little bit more. And of course, to get daily updates from Philip, check out the Facebook page. Just search for Statler Financial Services if you're on Facebook, and they'll pop right up. Philip, I asked you a couple of complicated questions with not a whole lot of time in the last segment, so that wasn't very fair of me. So we'll start this back up again here in this part of the show. We've been talking about your financial checkup, so figuring out what's going on with where your money is and how it's performing and how it could do. But then the other part of this, Philip, we have to talk about where our income is going to come from, because I'm guessing it's not the most reliable strategy to just take out money from your investments or try to sell off some of that when you need income in retirement. That's not your approach to planning for income in retirement, right?
You're right, Jen. It's not. And that's definitely, at least in my opinion, is not the way to create income, because then you are dependent upon what the market's doing to get your income out of it. So I'm a bucket guy, right? So we create bucket strategies for our clients. And so we know from the first year they retire to year 5, 6, or 7, depending on the plan, of where their money's going to come from. We've got it scheduled out. Here's what you're going to get. Here's where it's at. And here's how long it's going to last. And bucket number 2, hey, we're going to pick that up in year 5 through 7, depending upon how long bucket 1 lasts. And that's going to get us out to year 15, 16, 17. So that next leg's going to, that bucket's going to last. And then we got a final bucket, right? That's going to carry them for the rest of their life. So those buckets are going to create the income. Now we have a growth bucket that we're not going to use for income. It's there to grow back to where we started from, ideally, but it's also there for, hey, and I had a client do this, right? We want to take a month cruise around the world. And I had a client do that. Well, we paid for that out of the growth bucket, not out of the income bucket. That was an extraordinary expense. And we took it out of the growth bucket. Same type of thing, right? So income is scheduled out. We know where it's coming from. We got it bucketed to the right places, and we know how it's coming and when it's coming. And what we have in the market is over here, and it's for growth. Our income is not relying upon what happens in the stock market. And that's the way that we can create income that we know we will not outlive. And to me, that's what's important. If you're in that danger zone, if you're 5 to 10 years out from retirement, if you're, 0 to 10 years in retirement, it's important that you know where your income's going to come from, because it's devastating to people. If they retire today and the market goes down 40% next year, they will not recover from that at the income level they thought they were going to be able to live off of. And that's what I don't want to see, because I've seen it in not my clients, but I've seen it in prospective clients that I've sat down with, in the 2008 crash. I saw people that had to keep working. I saw people that had to cut back, by 50% what they were taking out of their portfolio to make sure that it would continue to last their lifetime. So I don't want my clients in that type of situation. We want the income scheduled out where we know where it's coming from and when it's coming.
So let's talk a little bit about, Philip, how we can get started with you. Obviously, things are a little bit different right now, but if we're realizing the plans that we had made don't really line up with the type of planning that you do, and we like the sound of the structure and the way that you do this, talk a little bit about how we can reach you and what this looks like.
So we can work with folks however they want to work, right? We can do phone appointments. A matter of fact, it's easier sometimes to schedule just a 15 or 20-minute phone conversation at the very beginning. Hey, let's talk to each other. Let's get to know each other a little bit, and let's figure out where you are and where we need to go from here. Before we then do either a Zoom meeting or we are in the office. So, you can come in, we do social distancing, and I mean, we're wiping stuff down multiple times a day. I don't wear a mask, but the girls up front are wearing masks. We prefer you wear a mask, just because we want you to be safe. And so that's kind of where we are now. And we're meeting people in our office, almost every day.
Philip, talk a little bit about how we can reach you and how we can get started. And I just think it's so important that we talk about the tax side of this, because everybody is so focused on what's going on with the markets, and we're looking at our losses and our 401ks. But what we can't lose sight of after we come through all of this is the tax side down the road. We don't want to be so focused on the things that are happening now that we're losing sight of the future. So talk a little bit about how we can reach you so we can start being proactive.
You're right, Jen. And let me just, before I give the number and everything, let me just tell you that you're right. And that's why I spend so much time with Ed Slott. He's considered the national forerunner when it comes to IRA and 401k planning. And so one of the things that he always says is that 401k is not yours. You have a partner, and that partner is the IRS. They are going to get their share out of your 401k money. Don't forget that. And folks, let me tell you, don't forget that, because that's so true. And so, it is one of the reasons that I do that. I take a lot of time and sit in his classes to get updated on what's happening and with IRAs and 401ks and the new Secure Act and now the new CARES Act and all that stuff. We just went through this major 2-day, we couldn't be in person. We did a 2-day virtual seminar, getting updated on those things, because it's important. How can I do my job for my clients if I don't know the tax impact of what's happening out there in the world today? And so I believe it needs to be one of the forefront things that we do. Everybody has burning questions. Do I have enough to retire? What will my retirement be like? Am I going to be able to create enough income with what I do have? Will it last me throughout my lifetime? Folks, that's why I created the Financial X-ray, so that we can walk through and determine if you're in the right place right now, or if we need to be some changes to your portfolio to make sure you don't have too much risk. 2, we'll find out what you're paying in fees and expenses that you don't even see. But it's important because it takes away from your earnings. Give us a call. Let us walk you through our Financial X-ray to determine where you are and what your next steps need to be. To do that, to schedule your no obligation appointment, give me a call at 863-285-3815. Folks, it's easy. You come in, we'll have a cup of coffee, we'll sit down, we'll visit, we'll figure out what's important to you and where you want to be in retirement. Call me right now to schedule your visit, 863-285-3815. That's 863-285-3815.
This is the Statler Financial Radio Show with Philip Statler, and I am Jen Rezac alongside, talking today about getting your financial checkup. Your financial health is just as important as your physical health as you get into retirement. We'll continue this on the other side of the break. Stay with us. This is the Statler Financial Radio Show.
If you have a retirement plan and would like a second opinion, call Statler Financial Services today. 863-285-3815. That's 863-285-3815. Remember that first paycheck when you started working all those years ago? You're finally out on your own earning money, and you look at the net amount on the check and you think, whoa, what happened here? Well, it could be this way with your retirement accounts. You know how much you've saved, but if you haven't planned for Uncle Sam, you could come up short in retirement. With the recent tax cuts, there is a lot you need to know to make sure you're not paying more than your fair share. Philip Statler and the Statler Financial Services team can help. They've helped hundreds of families plan for retirement for more than 20 years. They will help you create a retirement plan that shows you how taxes could affect you now and in the future. Set up a visit with Philip Statler and the team at Statler Financial Services. Call 863-285-3815. That's 863-285-3815. Make sure you know how these changes could affect you so you can avoid those whoa moments in retirement. Call 863-285-3815. Investment advisory services offered through Statler Financial Services, LLC. Neither the firm nor its agents or representatives may give tax advice.
Thanks for joining us today. This is the Statler Financial Radio Show. I am Jen Rezac, happy to be here with Philip Statler. He is president and CEO of Statler Financial Services. StatlerFinancial.com is the website if you'd like to learn a little bit more. And also, you can get daily updates from Philip by checking out the Facebook page. Just search for Statler Financial Services on Facebook, and they will pop right up. Philip, today we've been talking about getting your financial checkup because with everything that's been going on lately, we've been so focused on our physical health, but our financial health is really important as well. And I found this piece on Market Watch, and the question was, is quarantine like early retirement? These people think so. And they had some different opinions of people who wondered if the shutdowns and the stay-home orders, if this is what retirement will be like. And the results were mixed. People had very different, strong opinions about this. But as you read through this piece, Philip, one thing that sticks out to me is the fact that when you think about what people's perceptions have been of these stay-home orders, there are people who have been bored and stir crazy, and those are the people who typically haven't had to worry too much about their income. So they're a little bored, but they're okay. And then there are people who've really been struggling financially, and they've been very concerned, and they're desperate to get back to work. They were desperate to earn an income again. Those people had a very different perception of the stay-home orders. And I think, Philip, there's something that we should take as it relates to planning for retirement. You could be a little bit bored, but okay if you're okay from an income standpoint. But what would retirement be like for you if you were desperate to figure out where your income was going to come from?
Well, that's true. And that's a good point. I hadn't really thought about that, Jim. It makes some sense. And it gives those folks that are probably in their 50s, mid to late 50s, that opportunity to say, oh, man, if I had to live off of what I had right now, could I do it? Do I have enough of a cushion to get through? And so, am I bored because I have income, I can't go spend it, or because let's face it, Jim, there's people that were staying at home and were getting paid to stay home because there wasn't anything they could do, but their employer was gracious enough to continue to pay them.
Right.
And so that's kind of like retirement, right? They're going to have income coming in, but they didn't have anything to do. So they're sitting there twiddling their thumbs trying to figure out, how do I occupy my time? And that's could very well be retirement for people, right? Mm-hmm. They have money coming in, but now their lifestyle changed and they got to figure out, what am I going to do with my time? Now, obviously, at stay at home, you didn't have a choice. You had to stay at home. But in retirement, what am I going to do with my time? Because I don't have to stay home. Am I going to spend 5 days a week on the golf course? Am I going to spend 5 days a week fishing? Am I going to spend 5 days a week shopping? Those are things that impact our retirement. And the other side, the flip side, you said, those people who didn't have enough income to be satisfied staying at home, right? They were desperate because they didn't have that paycheck coming in.
Yeah.
And so they needed to go back to work. They needed that income. And that could very well be people in retirement that, they're getting Social Security, but that's not near enough to cover all the bills. And so, it's important that we plan ahead. If you're 50, 55 years old, you need to be running some numbers. You need to be doing some worksheets and determining, what do I need to do to cover where I'm at? What am I going to get in Social Security? Because you can figure that out today. You can go to socialsecurity.gov, you can get an account, you can pull up your estimates. Here's what I'm going to get. If I continue to work like I'm working now at 62, here's what I'm going to get. 65, 67, 70. You need to know what those numbers are and what do you need to supplement, because that's not normally going to be enough for folks. And so we need to have that plan in place. And that's, Jen, that's why I do the income plans, right? We need to know what that shortfall gap's going to be, and then how are we going to fill that gap? What are we going to do to fill that gap and make sure people have that income to live off of so that they can enjoy retirement and not stress over retirement. I want my clients enjoying their retirement, not stressing over how are they going to pay their bills, how are they going to live. That's where you need to be. You need to figure out what that number is and then start working towards it.
Talking today with Philip Statler. He is with Statler Financial Services, and I am Jen Rezac alongside. Philip, can you hear a little bit of the rumbling in the background that I have going on right now?
You got a little thunderstorm coming in?
It's storming where I am. We have different weather in
Man, it's sunshine at my house.
Yeah, I'm having some different weather here. So this is the beauty of us being able to do this show even when we are in different locations. But yeah, we'll just have to keep going through this. Got a little background noise here. The number to call to reach Philip Statler is 863-285-3815. Again, that's 863-285-3815. I love a rainy night, Philip, but not here during
not during work hours, right?
Not when I'm trying to get things done. That's right. Well, let's talk a little bit, Philip, about people who are realizing that the things that have happened this year, this has been a wake-up call for them about what's going on with their money, and the fact that, Philip, this is not the last time that the markets will go sideways on us. Something else will cause it to happen in the future. We might have more of it this year. It might be 10 years from now before we have another major market related event. We just don't know. So what do we start doing now to be ready for the next time we have some major drops in the market?
Well, I think that is probably a little bit age dependent, right? If folks listen to this are younger, and what's younger? Well, that means you're on the south side of 50, right? You're younger than 50 years old. Then you should be excited about these downturns. You should be excited that you can put more money away and it's going to grow faster when the market rebounds. Those people should be excited. Now, if you're on the north end of 50, you're over 50 years old, it should be a wake-up call that you need to make sure that you've got your accounts and your retirement assets properly diversified. Now, and I'll say this again, Jen, it's not that fancy pie chart that you see on your account statement. That's not the diversification I'm talking about. Mm-hmm. I'm talking about the diversification between what's safe and what's at risk. And that doesn't show up on your statement anywhere. That's the difference between independent and not independent advisor. We want to make sure that we're using the right tools and that we've got the right amount of your account safe and protected. And we've got the right amount at risk in the markets. That is a diversification that if you are 50 plus years old, you need to make sure you've got that right. That's why I developed the financial X-ray. That's why it's important that you know how much risk you have in your portfolio and what you're willing to lose at that stage of life. Because that growth in that account is what's going to determine your income when you finally pull the plug and decide to retire. Mm-hmm. So give me a call and let's walk through what the financial X-ray looks like on your portfolio. It's 863-285-3815. That's 863-285-3815.
This is the Statler Financial Radio Show. I'm Jen Rezac alongside Philip Statler. He's president and CEO of Statler Financial Services. That number one more time, 863-285-3815. Philip, what about those who are already retired as we talk about this need for a financial checkup? Is that something that's still worth doing, even if you've already set up a plan and figured out your income and you've already retired?
Jen, I could argue that it's even more important that folks that are already retired have a financial checkup, because I've met with a lot of people that had a plan, but in reality, the plan was not working. And so it's important to find out and make sure that your plan is doing what it should be doing and to make sure that the course you're on is not the course that's going to run out of money, that the course is going to get you through retirement and you still have an account balance at the end. That's what's important. And that's why it's important you have a financial checkup, is to make sure. And so that's, again, why we offer the second opinion, because we want to run the numbers for you. And I don't mean some blown up numbers, right, Jen? I see people that have these crazy estimates of what their account's going to make. And historically, those numbers aren't true. They're not correct. We need to be using ultra conservative income numbers. I'd rather err on the side of you got a lot of money left than you have no money left at the end of retirement. And so I think that's important, that when you look at what the plan is put together, what are the assumptions? Because most of the time when I see somebody's plan, the assumptions that their advisor used were not realistic. We want to think we'll make an 8% return in the market. And folks, given where we are today, that's not going to happen. Jack Bogle, before he passed away, one of the last studies he did, he said, we can expect the market to produce a 4 to 5% return for the next 10 years. That's somebody that's been in this business a long time and understands the markets. So we need to be using ultra conservative numbers, and I don't see that. And a lot of times people who had a plan put together, Jen, 5 years, 10 years ago, the numbers have changed. The realistic expectation of what you can earn has changed. Has their plan been updated to anticipate those changes? Probably not. And so that's why I think it's important that you get a financial checkup, that you get a second opinion, and that you get a financial x-ray. To schedule your no obligation financial x-ray, give us a call at 863-285-3815. That's 863-285-3815. Hey, if you're not ready for the financial x-ray, call us. Let's just schedule a 15-minute phone consultation. We'll sit and chat, figure out where you're at, where you want to go, and what our next steps may be. It's 863-285-3815. And before I let you go, Jen, I want to mention this. Why it's important that people find our Facebook page and like it and follow us, because that's where you're going to find out about things. We're going to launch some webinars here soon. Those will be posted. The signups will be posted on our page on Facebook. We do an Ask Philip Anything virtual. It'll be listed right there on that Facebook page of when it's going to be and how you get in touch. That's why it's important that you connect with us through Facebook so that you'll know when we've got things going on. It's easy. Just look us up at Statler Financial Services on Facebook, like our page, follow our page, stay up to date on what we're doing and how we're trying to help folks in the investment world and in our community here in Central Florida.
You've been listening to the Statler Financial Radio Show. Remember the number Philip shared with you, 863-285-3815. And as he said, if you follow them on Facebook, there's a lot of great information. Plus, you can learn about some of the upcoming opportunities to join those Ask Philip Anything virtual meetings. Again, search for Statler Financial Services on Facebook. I'm Jen Rezac. We're so glad you spent some time with us here today. We hope you have a great week and you stay safe and healthy. And we'll talk to you next time.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of principal. No strategy is guaranteed to be successful. This radio show is a paid placement.